99% of people will quit before they ever hit their first $100,000. And I want to be brutally honest with you right from the start. It is not because they are lazy. It is not because they aren't trying hard enough. And it is definitely not because they don't want it badly enough. If you have been grinding for months, or maybe you are even years into this journey, working your absolute hardest, saving every spare dollar you can find, giving up your weekends, and still feeling like you have absolutely nothing to show for it, I know exactly how you feel. It is deeply frustrating. It makes you want to throw your hands up, look at your bank app, and say, what is the point of all this sacrifice? But listen to me closely here, because this is the absolute secret. This is the one thing that shifts the entire paradigm. Once you understand exactly why it is so incredibly hard at the beginning, absolutely everything changes. Your frustration will turn into patience. Your burnout will turn into relentless focus. By the end of this episode, you are going to see exactly what is happening behind the scenes of your bank account. You will understand the invisible forces working against you right now, and I will give you the exact framework to break through this massive barrier. Welcome back to Grow with Tony. Let's start by talking about the math problem that absolutely nobody on the internet likes to talk about. We all hear financial gurus talking about the magic of compound growth. People quote Albert Einstein saying it is the eighth wonder of the world. They show you these beautiful, sweeping charts that go up into the stratosphere, but what they conveniently forget to tell you, compound growth is absolutely brutal, slow, and agonizing at the start. Let's look at the mathematical contrast so you can understand why you feel so stuck right now. Imagine you bust your back, you pack your lunch every day, you skip the concerts, you say no to drinks with friends, and you finally manage to save your first $1,000. You invest it perfectly, and you get a solid 10% return over a whole year. Congratulations! After 12 months of agonizing patience, you just made $100. You can barely buy a decent dinner for two with that after a whole year of waiting. It feels like a massive joke. But now, look at the other side of the coin. Imagine you have $100,000 invested. You do the exact same thing. You let it sit there. That same exact 10% return now makes you $10,000. Think about that for a second. That is life-changing money for most people. That is months of rent paid for. That is a massive chunk of a down payment on a house. That is a dream vacation funded completely in cash for doing absolutely nothing extra. Here is the harsh reality of wealth building. The first $100,000 requires the absolute maximum amount of human effort per dollar earned. Think of it like a massive heavy boulder. Right now, at the beginning of your journey, you are at the bottom of a steep, muddy hill. You are putting your shoulder into this massive rock, trying to push it up the incline. Your feet are slipping in the mud, your muscles are burning, you are sweating, you are exhausted, and the boulder is barely inching forward. If you stop pushing for even 1 second, it threatens to roll right back over you. That is the journey from 0 to 100,000. You are doing all the heavy lifting, but I promise you, once you reach the peak of that hill, the 100K mark, that boulder starts rolling down the other side. It starts picking up its own speed. It starts doing the heavy lifting for you. But it is not just the cold, hard math. There are 3 hidden psychological traps why this specific phase of your financial journey feels so incredibly difficult. And trap number 3 is the one that ruins almost everyone. Trap number 1 is that your money simply isn't working yet. Like we just talked about with the math, the returns on small balances are just too small to feel meaningful in your daily life. Because your money is weak right now, you have to be the engine. You are 100% dependent on your active income. You are trading your precious time, the sweat off your brow, your mental energy for every single dollar. You are not relying on assets, you are relying entirely on yourself. You are carrying the entire financial team on your back. And frankly, that is exhausting. When you wake up tired, your wealth creation stops. When you take a vacation, your wealth creation stops. You are the only motor driving the car. Trap number 2 is that the psychology of wealth building at this stage is absolute torture. Progress is virtually invisible for a long, long time. You are making all the right choices. You are reading the books. You are skipping the expensive vacations to Europe. You are driving the old, reliable car instead of financing a new one. But you check your net worth, and it still looks tiny. It feels like you are pouring water into a bucket with a massive hole in it. And then you open your phone, you look on social media, and everyone else seems to be winning. Your high school friend just bought a huge house. Your coworker is driving a brand new luxury SUV. Some kid on the internet claims he made $1 million in a week. Comparison to others absolutely kills your motivation. It makes you feel like you are doing something fundamentally wrong even when you are doing everything exactly right. And to make this psychological warfare even worse, lifestyle inflation starts sneaking in right when you are finally gaining some momentum. This is the silent killer. You have been grinding for 2 years. You finally get a promotion, or a small raise, or you land a new client, and suddenly a voice in your head says, "I deserve a reward. I've worked so hard." Suddenly, that slightly nicer apartment looks really tempting. Leasing that slightly better car feels justified. Upgrading your wardrobe feels like an investment in yourself. Before you know it, your income went up, but your savings rate stayed exactly the same, trapping you at the bottom of the hill forever. Trap number 3, and this is the most painful one. Right now, you are learning your most expensive lessons. When you are new to making and keeping money, you are a beginner, and beginners make mistakes. It is inevitable. You are going to make tax mistakes because you don't know the system yet. You are going to make bad investments. You might chase a hot stock tip from a friend and lose thousands. You might lock your money into a mutual fund with ridiculous 2% fees that eat all your profits. You are going to overspend on things you thought would make you happy but didn't. These first-time money mistakes are painful because they cost you months, sometimes years of hard-earned progress. Losing $2,000 when you only have $10,000 is a devastating 20% hit. Losing $2,000 when you have $1 million is a tiny blip on the radar. And the worst part is, nobody warns you about these landmines until after you step on them. You are paying the stupid tax that every wealth builder has to pay at the beginning. But if you can survive these 3 traps, you reach the promised land. Here is where the story shifts. Here is the light at the end of the tunnel. This is exactly why hitting that $100,000 mark is the ultimate turning point in your entire life. The legendary investor, the late Charlie Munger, famously said, "The first 100,000 is a bitch, but you have to do it." And he was completely 100% right. This specific number is an inflection point. Once you cross it, compound interest finally starts to feel tangible. It becomes a strong tailwind pushing your sales forward, instead of a brutal headwind holding you back. If the market goes up 10% in a year, you just made 10 grand while you were sleeping. Your money is finally stepping up and acting like a second employee working for you around the clock. But there is something even more important than the math. The real secret of the first 100K isn't the money itself. It is the person you had to become to save it. Think about the discipline required to save $100,000 from scratch. Think about the temptations you had to say no to. Think about the budgets you had to stick to. The skills you had to learn to increase your income. The emotional control you had to develop to not panic sell your investments. Your habits, your mindset, your financial systems, they are all built, refined, and battle-tested now. You have transformed from a consumer into an investor. From here on out, the money just scales those incredible systems you built. To prove it to you, just look at the math again. Let's say you invest $10,000 a year at a 7% return. Getting from $0 to $100,000 takes almost 8 brutal years. 8 years of pushing the boulder. But getting from $100,000 to $200,000, that only takes about 5 years. Getting from $200,000 to $300,000 takes even less time. The gaps get shorter and shorter because you already have the massive momentum, the proven skills, and the heavy capital working for you. So, let's get practical. The $100,000 question is, how do we actually get there faster? What actually works when you are down in the trenches? I am going to give you 5 steps. Step 1, you have to relentlessly focus on increasing the gap. What is the gap? It is the space between what you earn and what you spend. A lot of people only focus on one side. They clip coupons and try to save $3 on coffee, but they never try to increase their income. Or they hustle to make 6 figures, but they spend every single dime trying to look rich. You need to fight a 2-front war. You need to upskill, ask for that raise, start the side hustle, or change careers to earn more. And at the exact same time, you need to keep your living expenses ruthlessly low. The wider you can make that gap, the faster you will hit the target. Step 2, you must aggressively and intentionally avoid lifestyle creep. I cannot stress this enough. When you get a raise, when you get your annual bonus, when your business has a record month, that extra money should not go to a nicer car. It should not go to a bigger house. It should not go to designer clothes. It should go straight to your savings and investments first. If you make an extra $500 a month, pretend it doesn't exist. Send it straight to your investment portfolio. Let your future self be rich, rather than making your present self look rich. Step 3, Automate absolutely everything. You are human. You get tired. You get emotional. You cannot rely on willpower to manually move money into savings at the end of the month. Because if you wait until the end of the month, there is almost always too much month and not enough money left over. You need to set up your financial life so that your investments are pulled directly from your checking account the very second your paycheck hits. Make saving money the default option and spending money the hard option. Remove human error from the equation entirely. Step 4. Stick to one investment vehicle at a time. This is a trap so many ambitious beginners fall into. Do not scatter your precious early capital across a dozen different things. Do not buy a little bit of crypto, a tiny fraction of a real estate syndicate, a few individual tech stocks, and throw some money at your buddy's random startup. You are diluting your power. Pick one boring proven path. Maybe it is an S&P 500 index fund. Maybe it is a total stock market fund. Pick it, stick to it, and shovel every single available dollar into it until it hits critical mass. Focus creates wealth. Diversification protects it. Right now, you need focus. Step 5. Track the number obsessively. In business, there is a saying, what gets measured gets managed, and what gets managed gets improved. You need to know exactly where you stand. Update your net worth tracker every single month. Look at all your assets, subtract all your liabilities, and look at that final number. Watch the tiny increments. Even if it only goes up by a few $100, celebrate those micro wins. Watching that number slowly tick upwards is the greatest motivation hack in the world. And finally, you have to shift your mindset. Treat this whole process like a game with a specific hard finish line, not a permanent miserable lifestyle of deprivation. You are not going to live like a broke college student forever. You are just sprinting to a checkpoint. You are making a temporary sacrifice for a permanent upgrade in your reality. Now, before we wrap up, let's have some real talk. Let's set some honest, realistic timelines and expectations so you don't get discouraged and quit right before the finish line. For most normal, hard-working people who don't have massive inheritances or lottery tickets, getting to this first big milestone takes anywhere from 3 to 7 years. Let that sink in. 3 to 7 years of sustained, consistent effort. If you are 2 years into this journey and you have been working hard, but you only have $30,000 to your name, listen to me carefully. You are not a failure. You are right on track. It is just math doing what math does at the beginning. It is supposed to be slow. I want you to mentally picture a graph. The line stays flat, hugging the very bottom of the chart for years. It looks like nothing is happening. And then slowly, gradually, it starts to curve upward, and eventually, years down the line, it goes almost vertical. That flat line at the beginning is not failure. It is the foundation. You are pouring concrete for a skyscraper. Speed matters so much less than simply choosing not to stop. All right, let's quickly recap what you have learned today so you can walk away and put it into action immediately. You learned that the beginning is mathematically the hardest phase because your money isn't big enough to compound on its own yet. You learned about the 3 hidden traps, being the sole engine of your wealth, the psychological torture of comparing yourself to social media, and paying the expensive, stupid tax of beginner mistakes. We talked about why hitting the $100,000 mark is the ultimate inflection point where your money finally takes over. And most importantly, you learned the core strategies to speed up this painful process, maximizing the gap between what you earn and spend, automating your savings, avoiding lifestyle creep like the plague, and treating the entire journey like a strategic game. The first $100,000 is incredibly hard because it is supposed to be. It is the barrier to entry. It is the filter that separates the people who just talk about being wealthy from the people who actually achieve it. It is the tuition you pay for the financial freedom that comes after. Once you pay that tuition, I promise you the rest of your financial life gets so much easier. Keep pushing that boulder. I want to know exactly where you are on your journey right now. Drop your current number or your target goal down in the comments below. Let's build a community that holds each other accountable. If you found value in this episode, please drop a like on this video, hit that subscribe button, and don't forget to ring the bell icon so you never miss an episode of Grow with Tony. Also, head down to the comments and let me know what topic you want me to cover next. Your feedback drives this channel. Thank you so much for listening, keep growing, and I will see you in the next one.